Can Bitcoin act as a hedge against inflation? That is the question that we're answering in today's video. As always, before we jump into today's topic, make sure you drop a like on the video below. Make sure you are subscribed if you're not already, and make sure you hit the bell notification icon to stay up to date with all the latest action in the crypto space and to hit your crypto goals. So today's topic is obviously all about inflation and whether or not Bitcoin can truly act as a hedge against inflation in the long run. And based on everything we're going to take a look at, we can make a very good argument that not only can it hedge against inflation, but it is probably one of the best options for you when it comes to your financial future and putting your money into an asset that is ultimately scarce and ultimately going to yield great returns for you in the long run. As always, this is not financial advice, and make sure that you do your own research. But let's dive into today's topic. So right off the bat, what we're going to look at here is just a graph and a chart of US money supply. So this is basically all money in circulation, all of the US dollar in circulation. And again, we're looking at the US dollar because it is acting as the world reserve currency. And what we're seeing here is essentially the entire global supply of US dollar and the amount of printing that has happened and the amount of dollars in circulation since the 80s. So obviously a steady growth, maybe more than steady, maybe it's a little bit parabolic in terms of how much money is actually being printed. But what we saw here in 2020, 2019, amidst the entire global pandemic, was just a huge amount of money being printed and entering circulation. We went from a point of about $15 trillion to basically over 21, close to 22 trillion in the space of 2 years. So we're sitting at just under 21 trillion at the moment. But what that basically means is that almost a quarter of the entire US money supply has been printed only since 2020. So a crazy amount of money entering circulation, a crazy amount of money being printed, and a huge amount of inflation since the year 2020 as a result. And, you know, you're seeing that in your everyday life. Most likely you're seeing the cost of goods increasing. You're seeing that inflation impact the economy over the past 3 to 4 years since all of that money printing has happened. And what does that mean? It means obviously there is more money entering the economy, and the performance of other assets versus the US dollar is obviously going to be impacted as a result of that as well. So the next thing we're going to look at is GDP. And of course, GDP, again, this is US GDP, has been on kind of a very steady increase since the 1960s, growing all the way to 25 trillion. So obviously healthy growth of US GDP, and you know, somewhat to be expected with small amounts of inflation every single year. You would expect GDP to keep increasing incrementally year on year. But what we need to assess is really just leveling the playing field and thinking about GDP versus US monetary supply. And when we map GDP versus US monetary supply, the graph and the chart paints a very different picture. So obviously we saw kind of steady growth, maybe you could say, growth with peaks and troughs from the 60s all the way through to the early 1990s. And then we saw a decent amount of growth here in terms of GDP in the mid to late 90s. But since then, and since the rapid increase in money printing since the mid to late 90s, we have seen a very sharp downtrend with the amount of GDP growth for the US economy versus monetary supply. So again, if we want to truly measure how much GDP is growing by on a year-over-year basis, we have to map it against US money supply because there's just so much dollars entering circulation. And the US dollar obviously being the global reserve currency, but thinking about this from the perspective of euros or any other traditional fiat, you are being impacted by this, by the sheer fact that the US dollar is the world reserve currency. So again, this sharp decrease in GDP maps very closely to the sharp increase that we saw with money printing here in 2020. We're seeing that dramatic drop in GDP, obviously starting to recover again, but largely driven by that huge amount of money supply and the influx of additional cash into the system. So, how do we map BTC if we're going to actually think about its returns over the long run versus US monetary supply as well, and the amount of money printing that's going on? So what we're looking at here is obviously a map of Bitcoin versus the US dollar, but Bitcoin to the US dollar versus US money supply as well. And obviously we do not have as much extensive data for Bitcoin because we don't have as much price history. We saw GDP and we saw, and we will see some of the other assets have a longer price history, but what we can clearly see is that Bitcoin has performed extremely well in its 15-year lifespan versus US monetary supply. So what we're saying and what we're seeing in the chart is, despite the fact that there has been so much cash and so much money printing in the system, Bitcoin still outperforms every other asset, despite the fact that there's still so much money being printed, and it's the hardest asset that we could possibly store our money in. So what we're really seeing here is basically the performance of Bitcoin over time. We've gotten it back to about 2014 here with this particular chart versus US monetary supply. And if we map let's say the ROI from this point all the way up, we can see that it's been performing extremely well versus US monetary supply. So I'm not sure why the price range is not coming up there. It's not working for me as it should. But what we mapped a moment ago was basically the fact that we have over, I think, 170,000% ROI from Bitcoin since its inception versus US monetary supply. Comparing that to other assets over time, what we're looking at in this chart is the S&P 500. So this is the S&P 500 growth, again, versus US monetary expansion. And when we take into account all of the US dollars entering circulation, ultimately what that shows us since the year 1959 is only a 21% ROI on your investment with the S&P 500 versus US monetary supply. Of course, if you didn't map it versus US monetary supply, you would be having a much higher return on investment, but we need to level the playing field, and we have to look at this through an objective lens and say, what is our money really doing for us, and how can we put it into action in the most favorable way possible? So only a 20% return, I think over the course of 60 years, that is not a great return on investment, especially with the other options that we're discussing in terms of Bitcoin. Other indexes like the NASDAQ have definitely performed much better than that. So what we're looking at here is the NASDAQ from about the mid 80s up until the present day versus US monetary supply again. And the NASDAQ gives us about a 1500% ROI from the mid 80s up until the present day. So yes, depending on which assets you are investing in and where you are putting your money, there is the possibility to get good returns. But with looking at Bitcoin and the fact that it has outperformed every other asset class over its lifetime of the past 15 years, giving over 170,000% ROI in that 15-year period versus US monetary expansion, when we level that playing field and take into consideration how these assets perform when mapped against the amount of dollars entering circulation, Bitcoin is more than just a hedge against inflation. It is an asset that has an asymmetric upside. And obviously we cannot predict the future 100%, but I think it'll be extremely interesting to see how this asset continues to perform over the next decade. Of course, we're entering a phase over the next 12 to 18 months where Bitcoin is entering its next halving cycle in April 2024 of this year. And typically what we see with the Bitcoin 4-year cycle is obviously a bull market in the 12 to 18 months after that halving event. So seeing whether Bitcoin can continue to offer these kind of asymmetric returns will be very interesting to see play out. If you're going to be wanting to put your money where your mouth is, then possibly you're buying some Bitcoin already and you have been stacking your bags for the next bull run. But I think it's very clear when we level the playing field and look at the data and the graphs as objectively as possible and mapping them against US monetary supply, that Bitcoin has been outperforming everything over the past 15 years. And again, we cannot predict the future, but I think this bodes extremely well for the future and the asymmetric opportunity that Bitcoin and the entire crypto space presents. So that's the main question I wanted to address today. I think being as objective as possible, thinking about the ROI and thinking about securing your financial future and where you want to be investing, it's worth looking at this data, looking at this information, and perhaps you can garner your own insights. So as always, if you enjoy these videos, please make sure you are subscribed below. Make sure you hit the bell notification icon to stay up to date with all the latest trends and news in the crypto space. We are dropping new videos every single week. Make sure that you are subscribed, hit the like button, and we will catch you in the next one.